Higher retail renewals aided about 26% growth in SBI Life's March quarter premium. Now, BloombergQuint's Riddhima Saxena caught up with Sanjeev Nautiyal, the managing director and CEO at SBI Life Insurance, to get a fine print of the earnings for the quarter gone by. And here is a slice of that conversation.
Actually, the company for the financial year 17-18 focused on the individual side of the business. We have consciously restricted ourselves from doing the group savings business. And on the individual rated premium, we've grown by 31%, and we have now become the market leader among the private life insurers. The gross written premium have crossed rupees 25,000 crore this year for the first time, and that's a very good augury for us. And the renewal premium also came in thick and fast. Correct, and we achieved 106% of our budget.
Yes. Also, when we talk about the income from investments, that has gone down by nearly half between FY 2018 and 17. So what has been the reason for that?
The reason is primarily because the markets of late have been subdued, and the rate of interest on the debt side has gone up. Because of which the churning in the portfolio has not happened the way it would have been done. So that is the only reason which we can see has happened.
Also, when we talk about the ULIP share in the portfolio, that still stands about 73-77%. So how do you plan to phase that out and bring that down, considering that markets are volatile and ULIPs are only attractive as long as the equity markets are attractive?
Actually, our ULIP share used to be 79% in 16-17, and then again the company, as a conscious strategy, reduced it from 79% to 73%. So this year also we are roughly pegging ULIP share to 70% of the individual business, whereas in the entire scheme of things, if you take the entire business into consideration, then that share would come down to 55%. So we have seen that our ULIPs are more debt oriented than equity oriented. 35% of the ULIP is equity and 65% is debt. So we feel that the customers have already cushioned themselves as far as the equity market is concerned, and the rate of interest in the debt market is likely to rectify as we go along forward, and the impact of the debt side as far as the rate of interest is concerned will not be as acute as it could be in the equity side. So to that extent, our customers are better equipped, better buffered than customers who would go in for a higher equity share in ULIPs.
Correct. Yeah. Besides ULIPs, protection is another area where a lot of life insurance companies are focusing, mostly because of its profitability and the high margins that it generates. SBI Life has been able to grow it to about 5% of its portfolio. How do you see this particular product growing in the future?
We understand that protection business is absolutely essential for the life insurance business. It is the pure protection which customers require actually, and we need to create a market for this product. And we also understand that it stands in good stead for the life insurers because it gives a heavy margin. And if you look at the credit life protection business that we offer to the loan borrowers, especially home loan borrowers, the margin is extremely attractive. So this year we've taken up the responsibility of growing our protection business from 5.5% to in the region of 10%. 8 to 10% is what we are aspiring to achieve, and the main plan would continue to be the credit life insurance. In the bank, we have touched an attachment or a penetration level of 52%. We now intend to grow it by another 10% and to reach 62%. We've also tied up with a few banks, and we will now look for more tie-ups to see that protection business, especially credit life, is given its due place.
So in FY19, if you see protection rising to 10% of the business mix, how else would the other par, non-par and savings business be?
So it's again 55% would be ULIP in the entire thing. 10% would be protection, and 35% would be the other traditional savings and par and group products.
Correct.
Yeah.
Non-par savings product hasn't seen much of a growth in this particular year. Any reasons for that? Is that a conscious call that the company is taking?
Non-par products, we have actually not focused on that area. We'll look at what products are necessary for the market and devise our strategies accordingly.
Also, Mr. Nautiyal, one last question on the persistency of the company. 61st month persistency has dropped. What would be your reason for that?
Our 61st month persistency has seen a decline only because in the financial year 2012 and 13, which correlates to the 61st month persistency now, had a huge share of single premium business to the extent of 40%. That year a lot of single premium business was done. That is actually playing out now, because of which this decline has been registered. But I will also tell you that our numbers, even when they are declining, are still best in class, so to say. So 61st, actually, as you go along into the higher category of months, our persistency in terms of the market players is better than them.
As the new CEO of the company, how do you plan to take this company forward now that it has grown considerably? The listing of the company has happened. Now, what do you see as the key growth drivers and the focus areas that you want to focus on for the short to medium term?
The first and foremost thing is to get the basics right, and that would imply selling the right product to the right customer. So if we can, approach our business in this fashion, then the sky is the limit. We would be, building the capacity and the capability in the channels that we have, and the two major channels are banca and agency.
Absolutely.
We would be ramping up numbers as far as the number of workforce is concerned. We would be skilling them properly. Digital, we will be taking on a high. We already have good digital presence, but we would now be making it more, all-encompassing and more comprehensive, and looking the digital journey from the customer's perspective. And then to see that our own workforce, internal workforce, and our channel partners are also equipped properly. And I think that should ensure that the company does things right.
So next year's growth target then?
We have set upon ourselves a target of 30% plus growth for 18-19 as well. We want to maintain the trajectory that has been injected into the company, and to see that we take off and not slow down.